in the sequence to refer to my age, but that's another issue. Hey, I'm going to turn off the mic and just to get started. Sorry for the late start. I was not able to activate my charts until just moments ago. And you should still have charts. You probably saw a couple of windows pop up in front of my charts. I was actually activating a flash drive containing a couple of images that I'm going to show you in just a moment. First of all, as usual at this time, as we start to get this webinar started, I want to thank FX Street for everything they do to make these events possible, and of course for inviting me back each week for this weekly Thursday edition of Charting the Course. For anyone who happens to be new to this event, I don't know if anyone here is new. Feel free to raise your hand and call yourself out as a newbie. No, it's not embarrassing to be a newbie. Actually, curious to hear about how you found out about this event, or if you are new, probably from FX Street, perhaps from another source. What I was going to get to was the purpose of this event. The purpose of this event typically is I will conduct a review of both price action and news over the past several days, usually the past week, and carve out some time near the end of this webinar to take a look ahead. Forthcoming events which, in my mind, could affect the major pairs especially. Sorry, I'm quiet at times. I'm multitasking here a bit. I think I've got a clear slate now. You know, one thing I was doing before I took the mic and charts here was, as I always do at this time of day, scanning the charts, reviewing price action from today's London session, for example. But one thing I did was reviewed price action since the last time I was doing a webinar here. So over the past week, what has changed? What has changed over the past week? I'm going to take you to a different profile showing USD pairs. Yeah, Pan, you nailed one thing. Pan, you kind of stole my thunder there. I was going to make this, this big point, and no, I'm kidding, Pan. That's all good. But Pan does nail it. Well, in terms of currencies, you might guess where I'm going with that. Let's take a look at the euro first. Euro USD about a week ago was up in here, north of 131, and we're a little lower on the euro, but not much. Not much. So a rather humdrum, well, I mean, of course we had a notable rise on, what was that, Tuesday on the euro, and the euro came back down yesterday. But, not a whole lot besides yesterday and Tuesday. Not much. The euro has not materially changed over the past week. So, keep that in mind. Cable, about the same story. Look at an hourly chart here. Cable actually more down than up like the euro. But actually cable a little lower now than was a week ago. Some of the news yesterday, actually even today, has affected cable a little bit. Mostly yesterday's news. The dollar gained more ground against the British pound yesterday than it did even against the euro. Part of it had to do with news. UK, the Bank of England meeting minutes were released yesterday, and Bank of England Governor Mervyn King still voting for more QE, yet still being outvoted by other MPC members. Anyway, cable has changed over the past week, but not a whole lot compared to what kind of price action we've seen in the past. Well, I'm about to get to the main point here, which again Pan alluded to. I'm showing two charts now, one for the dollar CAD, and I want to change this other chart to Aussie. Okay. Yeah, you can see opposite moves. I got a little some junk on some lines on this dollar CAD chart. But I think you get the gist of it. There's about a week's worth of price action on dollar CAD. There's about a week's worth of price action on the Aussie USD, both in the same direction. Bear in mind that the base currencies are different in each pair. The base currencies, the dollar and dollar CAD. Base currencies, the Aussie on the Aussie USD. So, of course, as many of you know, a similar move on the dollar. Dollar gaining strength against these so-called commodity currencies means opposite moves. Dollar CAD up, Aussie USD down. But as Pan alluded to, the big story thus far this week has really been the sell-off, not just in gold, but really precious metals. And you even tack on industrial metals there as well. And one factor, as many of you know, is I don't know if it was the only reason, but it was certainly a notable catalyst, and that would be the China GDP report. Oh, did I forget my? I did forget my graphic for China GDP. Well, I can tell you verbally that the expected the consensus forecast for first quarter China GDP was 8%, and the actual figure was 7.7%. Now we've seen it in quarters past. Some market reaction to China GDP report, but not a whole lot of reaction. China GDP may affect the tone for the day for a currency like the Australian dollar, but in my assessment, China GDP has not had a hugely significant effect on not just the currency market but other major markets. Now, Monday was an exception. I'm not saying China is that much more important, although in some traders and investors' mind it could be. My guess is that. At least in part, the poor China GDP figure released during Monday's Asian session was perhaps an excuse for the selling of something that was already being sold, and specifically being gold. Let's go to back to my gold charts here. Dollar showing some notable weakness now. And I'm showing a daily chart for the year for spot gold. And notice that on Friday, last Friday, there was already a notable sell-off on gold. In fact, a notable break of the 1530 area, which has been important for a couple years or so. And then Monday just extended Friday's sell-off. And again, the Monday sell-off could have been attributed in part to the China GDP report. Anyway, gold sells off, several precious metals sell off, and the commodity currencies sell off on Monday, and that was really the highlight thus far, in my opinion, of the week. Yeah, Pan mentions oil, and that was that's a great point. And well, so you can call it really a commodity sell-off. I hesitate to say commodities because not all commodities sold off on Monday. I don't recall that soybeans or wheat or stuff like that sold off as quite as dramatically. But I didn't mention silver, by the way. Silver got hit hard on Monday as well. So again, very volatile day on Monday for the metals and the commodity currencies. Well, one reason I was took a little longer to get started than I would have liked was to transfer a couple of images that I want to show you here. So I've been talking about volatility here. A lot of volatility in the case of the currency market on the so-called commodity currencies, and by comparison, relatively less volatility. I think many of you would agree. Relatively less volatility on pairs like the Euro USD and pound dollar. So, given that other than Monday's notable sell-off on the commodity currencies, given that, in my opinion, not a whole heck of a lot has happened this week, this is the kind of week when I will I'll tend to focus on let's call it other trends or other indicators, if you will, of the currency market, to take a look at the bigger picture. And while I'm on this theme of volatility, let's stick with that. I'm going to drum up for you a graph that I prepared literally just minutes ago. So I tracked the data, but I haven't shown this graph to anyone. Now, some of you may track this type of data yourself. First, I've got to find the graph. Where is it? Here we go. I just realized this graph isn't completely labeled in a fashion I would like it to be, but let me explain this. Let me explain this. You're looking at you see a blue line. This blue line represents the 20-day moving average for the daily range on the Euro-USD currency pair. So what does that mean? Well, I can tell you I have a separate spreadsheet which I use to compile the calculations for this, and I can tell you that over the past 20 days, through yesterday, April 17th, over the past 20 days, the average daily range for the Euro-USD, you take each day over the past 20 days, take the high, subtract from it the low price, and so you get a certain number of pips there, high minus low for each given day. Take those 20 data points, compute the average, and you get some sort of number. Well, that number through yesterday, including yesterday's 110 pip range on the Euro-USD, and it may vary a little bit depending on what platform you're on. But I have the data I used showed about 110 pip range on the Euro-USD. Oh no, I'm sorry. I'm getting the things mixed up already. 110 was the latest moving average. Yesterday's move on the Euro-USD was closer to 200 pips. So sorry for the confusion there. So although we saw a nearly 200 pip move on the Euro-USD yesterday, the 20-day moving average for daily range is about 110 pips. There it is. There's the latest figure, 110. And the point I wanted to make was this. That's I haven't done I haven't even done the math in terms of where that ranks, but it looks to me, just visually looks to me like that you might call 110 pips an average over the past year, and I should have clarified that. This is April 18th of last year. I normally label graphs much better than this, but I just whipped this together fairly quickly before the start of this webinar. And again, this is April 17th, literally yesterday. So you follow me here. Volatility on the Euro-USD based on the 20-day moving average over the past year. It's been up, it's been down. It was up earlier this year. And still seen decent volatility on the Euro-USD on average. But I think one thing I wanted to bring your attention was this. If anyone assuming that the volatility is here to stay, well, maybe it is. But bear in mind some of the factors that affected volatility, especially last year. This notable rise started in early May of last year, seemingly in response to the the French and particularly Greek elections. Greek election last year, remember the Syriza party attracted a notable proportion of votes in Greece, and there was threats of departure of Greece from the euro, and markets got spooked. The Euro-USD sold off, and as is so often the case, a sell-off is known for exhibiting high volatility. And so the Euro-USD on average saw much bigger moves than what it had seen before the start of May of last year. Then things calmed down in the summer. Volatility picked up a little bit in the fall. Anyway, the point I wanted to make was this. We're still seeing decent volatility on average on the Euro-USD, but if I had to guess, I'm watchful of, and you might say concerned about, volatility dropping in the coming weeks as we approach the what's typically summer trading conditions. Now, what could change that outlook? what can I say, news, particularly out of Europe. It seems so common for some shoe to drop, for something to happen in Europe about this time every year for the past 2 or 3 years. I don't know if it's fair to expect anything here in the coming weeks. I just saw some news today that Italy's trying to sort out its political situation, trying to elect a president. Maybe that'll yet get resolved. So I don't know if anyone finds this helpful, but I think it's beneficial as a trader to see some of the trends in volatility, and we're still seeing some decent volatility on the Euro USD, but I'm actually watchful of the possibility of volatility going down on the euro over time, unless, and the key word is unless we do see some sort of new mini crises in Europe, which is always a possibility. Bear in mind, though, when it comes to volatility, and especially in response to events in Europe, markets can become complacent, can become sort of resilient to repeat events. So it's, compared, actually, let's go back to the Euro chart to make this point. And by the way, I have a similar graph for the dollar yen, which I'll show you in just a moment. Yeah, Pam, you make a good point about keeping track of profits. A profitable trade. The point I wanted to make, this is a weekly chart for the euro, actually a monthly chart for the euro. Perhaps I want to make this point on a weekly. No, monthly, because I wanted to show the original Greek sovereign debt crisis. By the way, the green line in this chart, that's a 200-month moving average, which not really that pertinent to this chart. The 200-week and 200-day moving averages are more significant. I just wanted to show you a monthly chart because it shows the span of time that I wanted to illustrate here. So on this monthly chart for the Euro USD, you got that sell-off. That was the sell-off in response to the original Greek sovereign debt crisis, starting in late 2009 and first half of 2010. That was the original Greek sovereign debt crisis. And we've had several, arguably smaller crises in Europe since. The list of countries seemingly goes on. There was, Italy, there was Portugal, there was Ireland, there was Spain in the mix, and of course more recently Italy. But notice how we've had some sell-offs at times, but if anything, the sell-offs are perhaps getting a little bit smaller. And the more recent case that I'm highlighting on the right-hand side, that is arguably Cyprus. I wouldn't say that's entirely Cyprus, though. And let me go to a daily chart to make that point. Here's a daily chart. Daily chart for the Euro USD. By the way, it is notable that the Euro, although made a brief dip below the 200-day moving average, is back above the 200-day moving average. And so for anyone assessing trend on the Euro and trying to decide, are you a bull or a bear, I'm not saying that should be the only factor which leads to your decision as to whether or not you're a bull or a bear, but the fact that the Euro USD is above its 200-day moving average, again represented by this lime green line, that is bullish. That is bullish. The Euro USD being above its 200-day moving average. Now, the point I was going to make was that this drop here that I'm highlighting now on the Euro USD. Yeah, it's certainly due in part to the situation in Cyprus, which evolved in recent weeks, but also, I would call that also a rally in the dollar in response to perceived rising odds that the Fed would perhaps taper back on its quantitative easing program. we've had some improving U.S. economic data, or at least had through that period of time, improving U.S. economic data, and markets were starting to, at least in my opinion, starting to price in very early, but still starting to price in a Federal Reserve, the U.S. Central Bank, which could be at some point in the course of the year less accommodative in its policy strategy. In other words, the markets thought that the Fed would eventually scale back on its bond buying program. But I think many of you would sense, if you haven't, I'll tell you, that recent U.S. economic data hasn't looked so good. We had a very, very poor jobs report released earlier this month, and we've seen there's some other economic indicators which are showing signs of weakness. Signs of weakness which could be due in part to the so-called U.S. sequester, across the board government budget cuts, plus, in my humble opinion, we still have a pretty lame U.S. economy considering the amount of stimulus being provided by the U.S. Central Bank. So that leaves us with the euro at around 1.30 and kind of wondering, what's next? And I could probably talk more about the euro, but I do want to make time for the other graph that I had prepared for you guys, for you folks, and that is a similar graph on the dollar yen. Anyone, before I show it, anyone care to guess what the dollar yen graph is going to look like? Again, what I'm about to show you is a graph similar. Let me show this again. I'm going to show you a graph similar to this one that I just showed you for the Euro USD, only the next one is going to show you the 20-day moving average for the dollar yen. You can probably imagine what that looks like even before I show it. And without further ado, let's give it a look. And there it is. You can see the again, this is showing the span of time over a year. Over the course of last year, this shows the 20-day moving average for the of the daily range for the dollar yen currency pair. Now, I could have picked other currencies, but this, the dollar yen's to me at least a classic proxy for the yen crosses. Let me show. You can see from here. That's about mid-November there, mid-November of last year. Ever since then, we've seen a notable spike in volatility. And volatility has picked up of late, particularly in response to, was it just last week we saw the Bank of Japan announcement, which was a surprisingly aggressive, even more aggressive than the markets had been pricing in them over the past several weeks. Aggressive, easy moves by the Bank of Japan at its latest meeting. Anyway, volatility is still, relatively speaking, on the high side on the yen crosses. And we got another Bank of Japan meeting coming up next week, so that's later next week, as I recall. And some speculation about some tweaks to the policy that Kuroda, the new Bank of Japan governor, may make. So it's I would not assume that the volatility on the yen cross is going to go away anytime soon. I suppose it could, but given some signs of weakening economic data, the Japanese yen could still at times show its former tendencies as a safe haven currency, so that could affect the Japanese yen, plus the prospect of further tweaks in policy by the Bank of Japan. So there's certainly circumstances still exist for volatility. Maybe not the kind of volatility we've seen, but still relatively higher volatility on the yen crosses. Certainly higher compared to what we saw for much of the past year before, especially mid-November. Well, I've got about, this webinar is normally scheduled to last another 15 minutes to end at 7:45 a.m. New York time. I should have mentioned this earlier, but I'm going to have to wrap this up a little bit earlier. I'd say at most 10 minutes from now, I've got to wrap this up. I've got a meeting to attend that it's not a virtual meeting involving like a phone call or a Skype call. It's a physical meeting that I've got to attend in a 15-minute drive from here, and I've got to be there in time. So I'll have to wrap this up a little early. Let me review some of what comments I made here and open up this room right now to questions. I mean, I can fill the time in the next 5 or 10 minutes with another topic or two. I've got some things in mind, but I often don't make time for questions or to address comments. I just, once I get these webinars started, I tend to blah 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 blah. I just blab on. But let me take a look at the commentary, see if I missed anything. You guys have been relatively quiet, it seems. Steve sends surprise at the U.S. strengthened market. Steve, to clarify that, you say you're surprised at the dollar's strength? And if so, could you explain why that surprised you? I'm not trying to make you look dumb or make you look bad, Steve. I just want to better understand your perceptions of the dollar's move of late and what makes you think the dollar should be weaker. And by the way, it's not crazy to think that to wonder why the dollar shouldn't be weaker. And Steve, if you're not comfortable with answering the question, that's fine. Let's just put it this way: unless your answer surprises me, I would guess that my response to whatever answer you provide is going to be something like this. And it's something that I'm always reminding myself of because I fall in the same. I can fall in the same kind of traps as virtually any other analyst or trader. I'm always reminding myself, always, virtually every day, before every trading session, reminding myself, currencies are relative. Currencies are relative. Even I can fall into the trap of analyzing, one economy, in this case, the U.S. economy, or one central bank, in this case, the Federal Reserve, and it's easy to get tunnel vision and focus on one central bank or one economy, and not consider the bigger picture, and that being how does the U.S. economy or how do moves by the U.S. central bank compare to other economies and current or prospective moves by other central banks. Oh, I see Steve's followed up with a comment. Yeah, so the jobs number is poor. So, Steve, my take on the Euro USD is this. Now, I'm just going to use the Euro as the guide or proxy for the dollar. So Steve makes very valid points about the U.S. economy still relatively weak. Steve, one of the best answers I can give you is this. Again, remember, bear in mind currencies are relative. In the case of the Euro USD, so Steve, are you wondering why, given the U.S. economic data, is your question, why isn't the euro much higher? Is that your question? Yeah, it's a valid question. My guess is this. I'd say a twofold answer, and they're sort of related. Actually, very related. Number one, actually, I'm already prepared to make this a 3 or 4 or 5-fold answer about it. I've got to keep it simple. Right or wrong, markets believe that the Fed has done just about everything it's going to do. It's not, now when it comes to, well, actually, I'm jumping ahead a little bit. You may be assessing the dollar's performance or what you think the dollar should be doing based on the economic data. Now, plenty of times the dollar or the major currencies do respond to economic data. One of the key drivers of this pair, however, and actually it applies to several pairs, central banking policy. Central banking policy, specifically what the market thinks central banks will do in 6 months to maybe up to a year ahead of like right now. So in the interest of keeping this in time, and I got to wrap this up in about 5 minutes. Looking at the Euro USD, my guess is that market thinks that, number one, the Fed well, while the Fed may continue to be accommodative in its policy to keep its so-called Q program going, the Fed's probably not going to do any more easing to introduce a new program. By comparison, look across the pond at the Europe, specifically at the European Central Bank. I suspect that markets believe, right or wrong, and I think it's a reasonable expectation that markets. I expect it's only a matter of time before the ECB jumps on some form of additional easing, whether it's lowering rates or potentially even some sort of quantitative easing. To me, that's one thing keeping pressure on this pair, the Euro-USD. The prospect of eventually more easing by Europe. And by the way, going back to your point about U.S. economic data, have you seen the data out of Europe? I mean, the data out of Europe isn't much prettier. In fact, in so many countries, the data is much worse. The so-called peripheral countries, in Spain and such, I mean, some very weak data out of those countries. So if you think the U.S. data is weak, and U.S. data is not pretty, but remember my point earlier, currencies are relative. You can rightly make good points about how weak U.S. economic data is, but by comparison to, and I'm just talking about data, not about central banking policies, although the policies are related to how the economic data look. By comparison, the Euro-USD, I'm going to give you an analogy here, an analogy that many commentators on, many so-called pundits on television and analysts and economists use this analogy. Right or wrong, the U.S. is still seen as the least dirty shirt in a closet full of really dirty shirts. So imagine, each country represents a shirt, the U.S. Or each economy, the U.S., Europe, Japan, the U.K., yada yada yada. Of all those so-called dirty shirts hanging in a closet, the U.S. is considered the least dirty. The prettiest of the pigs in a pig pen. Anyway, I hope that analogy helps. So I would suspect, and the market thinks that eventually the ECB is going to have to step up and ease policy further. So that may be one thing limiting the any rise on the Euro-USD. Healthiest horse, yeah, wow. I never thought about that one, but. So Steve, I hope that helped. And Steve, it's if you feel like if that's something you're struggling with, believe me, you are not alone. I mean, the markets it's. I think we're in one of the toughest realms right now we've been in a long time, perhaps ever. Considering that so many central banks are doing variations of the same thing. That's made for times very difficult to assess what direction in the next several weeks or months major currency pairs will make. But again, my take on the euro specifically is that, well, I guess the dollar in general, but specifically on the euro-USD is this, that the reason why we're not seeing any extended dollar weakness is that again the whole dirty shirt analogy. And specifically on the euro, the prospect that eventually the ECB is going to have to step up and weaken and provide so-called stimulative policy, lower rates, and maybe even some form of QE. Yeah, many think the Germans are going to cave in and agree to more QE, but that may not happen until after the German election in September. Honestly, what do I expect on the Euro-USD for next week? More of the same. Honestly, more of the same. If I have a graph here or a chart which illustrates the dilemma we're in. Ooh, that's not what the one I wanted to show. Yeah, we're sort of stuck, and we need a catalyst here. It may come down to just strictly technical moves, whether or not the market can break certain key levels or zones. I'm at a red line at 3170. That's close enough, so you can see why that's an issue. So I may not give you the answer that you like, but at this point, I'd say you kind of watch key levels when it comes to the recent move certainly has been up, but the broader move's been down. So there's some question marks as to what's next. Looking ahead at the news, I'm not seeing anything that's going to move the needle for the euro in the coming days. So we had a G20 meeting starting, was it today or tomorrow? Group of 20 industrialized nations, representatives from the Group of 20 industrialized nations meeting in Washington, D.C. today and tomorrow. Maybe they'll shake things up, but honestly, as I see it, the Euro USD's, the market's trying to figure out what to do with the euro right now. Let me zoom back in on this daily chart. So again, if you ask me what to make of this, hey, it's just, you could literally trap price like this and say, hey, let's wait for the euro to do something, wait for the euro to break out of this recent trading range. Now you could trade the range. You could trade the range, buy low, sell high, that sort of thing. But again, if you're asking me what's the next move for the euro, well, based on the past few days of price action, I think the market's trying to figure that out. So it's not unreasonable to say just wait for the market to tell you what it wants to do with the euro and then trade accordingly. Yeah, some consolidation on gold would not surprise me after that significant move from earlier this week. I'm not convinced that gold's got nowhere to go but down for the coming weeks or months. But there's going to be a time when gold's going to find support and turn back up. And to me, and I got to wrap up at this point, until especially multiple central banks start scaling back on their Q programs, I don't see that there's infinite downside for gold. Now, could gold continue down further? Sure it could. But I got to think at some point, gold's going to stabilize and resume its uptrend. I guess the bigger picture being, to me, as long as central banks are expanding their balance sheets, which generally speaking they still are, the long-term trend, the multi-year trend for gold, in my opinion, is still up. Yeah, so I got to wrap this up, folks. I hope this is helpful. Hope you have a great day, great rest of the week. We'll do this again next week. By the way, if you're looking to keep tabs on what I'm doing, where I'm at and stuff, you can, number one, you can contact me via email. I've got a new email address. That's the way to reach me. I've set up a new website that you can keep tabs on things like my blog posts, my Twitter, my tweets and such. Check out this site, flavors.me/Wehrley. I just posted my email. Oh, wait, I'm sorry. I just posted it to administrator. I got to post it publicly. Hang on. Sorry about that. There's my email. You should receive that. You should see that now. And the website that I just referred to is there. All right, folks. Have a great day. Thanks for joining us, seriously. And thank you again to FX Street for making this event possible. And by the way, I don't consider this one of my better webinars. I aim to do better next week. I'll have to have more to talk about and provide more helpful commentary. But what can I say? Other than the sell-off in gold and commodities on Monday, it's been a rather humdrum week. Hopefully, we'll have more to talk about next week. Cheers, folks. You had a disco, really? See you again.